Evening, everyone. Mike, Akhil, how are we?
Good, thank you. Very good. Yourself?
Very good indeed, thank you. You had a good day, Mike?
Very good. 8 o'clock start. All appointments all the way through till 5 today. Absolutely manic, but very enjoyable.
Well, we can talk about exactly that volume in the property market. So obviously on this evening's live chat, which is across a couple of different platforms. Really pleased to have Akhil with us and Mike as well, where we're really going to get into the details of property investment. We're going to get into the details of landlords, portfolio landlords, and all the different ways that lenders at the moment are offering different investment strategies out through different finance options. So I'm excited to get into this one because it's really talking about buy-to-lets and property investing. All of us on here are landlords ourselves. Obviously investing in property when the right deal comes available. Now what we have to talk about is what's the right finance that's available as well. So let's have a little bit of a conversation. But first of all, Akhil, just a little bit of an intro. You're obviously the MD of our mortgage broker. A little bit of an intro and a bio to yourself.
Thank you, Ian, and thanks, Mike, having me on tonight's show. As Ian said, my name's Akhil from our mortgage broker. We specialize in all things property and mortgage finance. So whether you're a first-time buyer, portfolio landlord, or a commercial investor, we like to think of us as a one-stop shop for all mortgages and property finance.
Love that. And Mike, obviously your background for everyone that's not seen you on one of these before?
15, 16 years a letting agent, 10 or 12 years as a landlord in my own right.
Brilliant. So we have got the right people for this conversation. On the agenda today, we're going to kind of talk about 2020 and what went on with the banks and the mortgage options, the finance options, and where that's changed moving into this year. We're going to talk about with Akhil some new lending options as well, whether it's student lets or holiday homes or serviced accommodation Airbnb, and where the lending sits with that too. We're going to hopefully offer some help, advice and tips to first-time landlords or first-time property investors. Talk about BRR, buy, refurb and refinance, which is becoming very popular at the moment. I know you're quite passionate about that, Akhil. Talk about ways around different finance options for ERC penalties, expectations for 2021. And obviously we're going to cover tenant demand and trends at the moment and what we're actually seeing from tenants so that landlords know what the tenants are looking for. So I guess the best place to start is 2020 and where we sit now. Was there a big surprise in property investing, buy-to-let mortgages for you, Akhil, with the banks as we ended the year? Was there any surprises and shocks for you with everything that had gone on with the pandemic?
When the pandemic came about in the first quarter of 2020, I thought we're going to have a massive price dump. I thought, UK residential property is going to fall flat on its knees and we're going to go into, negative equity and so on. But what's actually happened is, very surprisingly, as 2020 went on, we found that we were doing more and more business each and every month compared to 2019, for example. So from a brokerage perspective, it's been phenomenal. And, you and I always speak on often, I should say, and business is growing for both our sides, for the positive side, I would say, for sure. We had a bit of a downturn in terms of the product suite that was available in 2020, predominantly in lockdown 1, where a lot of lenders were reconfiguring, working from home, getting their tech right, getting the applications right, and dealing with the holiday payments that they put out there by the government. But ever since then, during the end of 2020 and the beginning of 2021, we're seeing heights of pre-Lehman's crash with loan to values at 95% now. We've got great interest rates on offer and various mortgage types available now as well. So whether it's a student let, a HMO let, Airbnb, we're back at those great loan to values and, more importantly, at great rates.
No, it's good. It's interesting stuff. Mike, from your perspective, what were the trends with buy-to-let investors? Were you surprised with how they kind of reacted to everything?
Yeah, I think the whole market took everyone as a surprise because, as Akhil said, if you're going to shut down the entire economy, you imagine house prices are going to go with it on a confidence basis. But it went the other way as people needed different things. From a rental perspective, what I've seen is tenants, if they're happy in their houses, they're staying longer and longer and longer, and that is giving landlords more confidence that there's more stability. So if you've got a 3-bedroom house or a 2-bedroom house and it's well maintained, it's well kept, your tenants are going to stay there because they're not going to move. They're not going to move unduly at this time. And that's meant that the supply of new properties to the rental market has been really constrained. And with that, it's in the southeast, it's pushed prices up. Even though people's incomes in some cases have been hit, the demand for houses has just meant that house prices have risen. I can't speak for London because I'm not there, but obviously outside of London, where we are in the home counties, there's just so few properties coming available. If I speak to another buy-to-let investor and they say, "Well, what should I do? Should I buy? Should I not buy? Should I hold?" Well, just take a look at Rightmove, take a look at Zoopla, see how many houses are available to rent and how many have been rented. You'll see there's 2-3 houses available in each postcode at any one time. So there's just a desperate extra demand for property, which means people can buy them with confidence that tenants will just walk into their house the minute they take the keys.
Confidence is key, isn't it? I think that's the key word that you mentioned at the end there. And I think there is confidence with the lenders at the moment, Akhil. In take residential out of it, there's clearly confidence there because the interest rates have dropped for the last 3 months running. But what new lending options are there? What new finance options are there? And what are the banks trying to appeal to in terms of investment strategy? Is there different models that they're looking into at the moment, or is it kind of very standard buy-to-let resi still? What's your thoughts on that? What are you seeing?
It's a great question, and there's lots of positives coming out of that space. Now, lenders contact us often to ask, what are the trends? What are your clients looking for? And this is predominantly targeted for those portfolio landlords. Are they looking at diversifying their portfolio to do Airbnbs, HMOs, multiple lettings? Are they looking at multi-unit freehold blocks? And we give that feedback to those lenders to say, our clients want this type of products. You need to be more innovative and create those products and those type of criteria that adopt to the current trends. Now, predominantly, especially in the southeast where the yields are not so great, but capital appreciation is great. And once we have that bounce back, the capital, and I'm talking about London and predominantly the home counties, will bounce back with a vengeance. So we've seen a great positive attitude from a number of lenders over the last 2 quarters in particularly. Great interest rates, great innovation with products, and great rates. So it's phenomenal what they're doing. And more importantly, actually, is their turnaround time. You guys are well placed in that space. You put a property on Rightmove, for example, on a Monday, you've already got queues of people that want to view the property on a Tuesday. So the demand is there. And what that needs to happen then is the lenders need to understand the demand levels and contribute from a lending perspective. And likewise, as brokers, we need to adapt to that and work, all hours of the day, because we understand our portfolio landlords don't just work 9 to 5. And we've adapted to that as a brokerage. And we do work 7 days. We take pride in our job, and we take it personally. So it's all positive from our side. It is very tiring, but listen, I would rather be in this position than jobless. So I'm grateful.
Absolutely. I think we all are, because we're almost privileged, aren't we, in a way, compared to a lot of the other industries out there that we're having a bit of a special moment at the moment in the property market where it is going a little bit bananas. And I definitely think there's more buy-to-let investors out there than I was expecting to see. And it's interesting to hear the different types of options that are available for different strategies as well. Mike, would you have a particular kind of opinion on where you think the risky but potentially rewarding option could go down, or what's the kind of safe bet? What's the secure bet in property investing at the moment, would you say?
Certainly the safe bet is in family homes, because house prices are on the increase, and with that it means that people who have children but don't own a property are going to be cut out of that even more than they were before. So if you buy to rent a 3-bedroom family house, there's a good chance if you put the right tenant in there, they'll be there for 5, 6, 7 years, which from a landlord's perspective, from a management perspective, makes life very, very easy. It's very much a hands-off as possible investment rather than the constant turnover of an inner city flat. There's obviously more risk in things like Airbnbs and in HMOs, because if we go into lockdowns, that's where you have more transient people, more spur of the moment people renting property. Whereas if you've got a family, it's harder to move a family with 2 kids, as we all know, than it is just to move yourself from a temporary accommodation. So for me, the safe option is and always has been a 3-bedroom house. But right now, the way house prices are moving, there's a good chance when you agree an offer on a house, by the time it's completed, it's gone up in value.
Yeah, I'd echo it. I'd echo what Mike said, and I'd add also is, particularly for those portfolio investors out there, you've got to diversify. And there's 2 main focuses, and I speak to a lot of portfolio landlords. Is you've got to look at your blended loan to value rate across your portfolio, and the sweet spot and where you want to be is at around the 60% loan to value rate, because even if you do have a price correction, they can stomach those 5 or 10% price corrections. And the other advantage is at 60% loan to value, you're going to get really, really favorable rates. And then ultimately, every lender's going to want to chop your hand off and take your business for that. So I think where you are on a blended approach on a loan to value is very, very important. And again, don't put all your eggs in one basket. As a property investor, I love my 3-bed houses. It's a safe bet. And Mike, you're 100% correct. But if you're looking to become a bit more entrepreneurial, you may want to just look at the other options, the other higher yielding options, just to take advantage of the higher yields that might be out there, predominantly in the HMO space and the multi-unit, especially around the student-led space as well. So, don't keep your eggs in one basket is my suggestion. And actually, it's the output I'm getting from a lot of our portfolio landlords, that they want to diversify, but do it in their own time and once they're confident in themselves.
No, it's great advice. There's a couple of people checking in to say hi. Couple of guys here saying hi, so it's good to see everyone watching. And if you are watching, don't forget, yes, we're live, and even if you're watching the recording afterwards, ask us a question. We will deal with it live, or we will respond to you after we've finished. We all work late, as Akhil mentioned, so we're happy to reply to comments all the way through the evening until we're asleep. So no worries there at all. So good advice there. What about kind of buying, refurb and refinance, Akhil? Would you say, as the property market appears to be moving upwards at the moment, that is a good option for people to look into? There are some people doing good deals potentially as well, where we're rushing and panicking for the stamp duty holiday. So there's options there for people to pick up a really good bargain where people are saving money on stamp duty. Do you think that looking at this abbreviation of BRR, is that kind of the way to go for a lot of investment landlords at the moment?
Yeah, no, it's a great question, Ian. And let me just break that down for those viewers of watching this. So BRR or BRR, the strategy means basically you're buying a property, you're going to refurb the property, and then you're going to refinance at the uplift value, right? So that's a breakdown of what BRR stands for. It's been around for many, many years. It depends on your strategy. It depends on how experienced you are, and ultimately what the end game is. So in short, you've got numerous options to buy a property. You buy a property using your physical cash. You can buy a property using a bridging loan, or you can buy a property through a traditional mortgage. Now, let's go down the traditional mortgage route. If you're buying a property with a view to refurb the property and then refinance at the uplift value, you can do so because there are mortgage lenders out there that offer you a mortgage product with no ERC penalties, so i.e. no early repayment charges. And that's that's the most cheapest way of getting into a deal by taking out a traditional mortgage rather than a bridging loan. Then you're going to add value to the property by bringing it up to the market standard or increasing its value, being the top property on the street. And then what you're going to do is come and see us again, and then we refinance at the top end at the new market value to pull out as much cash as possible, including the refurb money, in order for you to go shopping again and do it again. Now, the BRR strategy is amazing. It does work very well, but we like to work with our clients and understand their investing strategy going forward, and ultimately making the numbers work. And how do you know you're going to make the numbers work? And the key here is you always make money or don't make money on day one of purchase. So you've got to buy right. Then you've got to compare what you're going to do to that property tomorrow to make it more relevant in that market space, and ensure that you do get top dollar in terms of the surveyor when he comes out to revalues the property. So it's a very buoyant market at the moment, the BRR strategy. I would certainly recommend it to all property investors, but the key here is to understand the numbers. How much are you buying it for? How much are you spending on it, including contingencies? And what's the end market value? So do get in touch with us, not here to sell ourselves or anything like that, but do the numbers, speak to your brokerage, speak to the agents as well, because the agents are the guys and girls that are going to provide you with today's numbers. And then once you've uplifted the value, they'll give you a good reflection on what the new market would look like.
It's exciting stuff. It's something that I've done in the past, Mike. And I guess from your perspective, it's something that's probably important to look at the deal, look at the location. So you want to invest in a really good deal that's in a great spot for hopefully equity growth, organically, as well as obviously the work that you're going to do. I guess you have to really know your costs, really know exactly what you're spending money on, because a lot of people can be guilty of refurbing a property to a level that they want to live in, when it's not always required to get to that specification. You want to do it properly, but you don't want to overspend because it kills the finance option. And then look at talking to someone like Akhil that's really going to work with you to make sure that the loan penalties within that are kind of set so that it's going to make it affordable as well. And I think when you do something like this, Akhil, I would imagine, hopefully you'll agree, but it's vital that you kind of almost have that trusted power team before you get into it. You need that solicitor, that broker, that accountant, maybe an estate agent, not one to plug an estate agent, but you need the right estate agent working with you on it as well. That's probably how it becomes a win, I would say.
No, I certainly agree with everything you said there, Ian. You have to surround yourself with the right people. You need the right agents, you need the right finance broker, you need the right conveyancer, and so on and so on. Even an architect, even a planning consultant. So if you are looking to get into property for the first time, or venture into becoming a portfolio landlord, or grow your portfolio further, please, please, please surround yourself with that right power team. And when you're discussing your views, your goals, and so on, make sure you're speaking to people that have been there, done it, wore the t-shirt. No offense to those that are living the dreamland, but at the end of the day, it's your blood, sweat, and tears that you're putting into this venture of yours. So do speak to the relevant people that have got skin in the game, been there, done it, and wore the t-shirt as well, for sure.
Experience is vital. Mike, anything to add on that from your perspective? Are you seeing those sort of deals available at the moment that you think, that would make a great one to purchase, do some work to extend, go over the garage, maybe out the back?
I think, you've just answered you've just given my answer away, essentially, with the last sentence there. Although houses, and good houses, are obviously selling quickly, and they're selling at a premium at the moment because there's so many buyers in the market, it doesn't mean that by the time you've finished your purchase, it won't be worth more than you agreed for it. And also, look at where you can improve the value. And Akhil mentioned a planning consultant or an architect or a builder, someone who, other than you can you can email the floor plan to. They can draw all over it with a biro and send it back and say to you, it's great that it looks like that now, but do this, add a bedroom, find a way to add value, add an ensuite that wasn't there out of wasted wardrobe space, cupboards over stairs, whatever it might be, that turns it from a house that was suitable in the 60s, 70s, and 80s to something that is desirable now. And that's where I see the capital value being added. The rental value will tick up. It will never drastically pay for itself in that sense, but you can certainly put the capital value on top of it, no problem at all, even in the market right now.
And I think we're talking about trends.
Don't go looking for 20% under market value in the southeast, though, because
people are too savvy.
It's not a thing that I see.
Yeah, we'll talk about trends in a minute as well. Trends with those types of properties, trends with tenants. Chris Gray's jumped on, asked us a quick question. half of it, I guess, Akhil can honestly answer, and half of it, maybe not. What's the minimum deposit required for a buy-to-let mortgage, or could I buy my next property on a residential mortgage and just rent it out? Definitely one for you, Akhil, there.
Yeah, so let's start with the latter first. That's can I buy my next property on a resi mortgage? It's not morally right. So, first and foremost, it's not morally right. You're in breach of your contract. If the lender ever got news of it, they'll call in the loan. You're going to get black marks potentially on your credit file, and so on and so on. So, do the right thing. Think of property as a business, and do the right thing first and foremost. With regards to the minimum deposit amount required, buy-to-lets are great. We're now back at up to 85% loan to value, so you can get into a buy-to-let with as little as 15% deposit. So it's not a million miles away from residential loan to values whatsoever. So maximum loan to value is 85%. And then the lower you get to the loan to values, and obviously the rates get more keener and more achievable. So 15% minimum ideally required.
Good. Like that. Thank you, Akhil. This might be a question for you, Mike. With a traditional buy-to-let, would you be better placed to keep a longer-term tenant that pays below market value, or are you better off increasing the rent and risk a tenant leaving and potentially having the property sit empty? I guess it's the question of greed and capitalisation on the fact that there is a level of demand and supply issue at the moment versus loyalty to the tenant. Which bracket would you fit in at the moment?
I've got two answers which are going to conflict each other. Firstly, if your flat is a £1,000 a month flat all day long, then you rent it for £950, £975. You'll buy the loyalty of your tenant, absolutely no doubt, because every time a renewal comes around or any time a problem comes around that pushes them onto Rightmove, they'll see that you're giving them a good deal, and that temptation to move will be over within 30 seconds when they see another flat in the block available for £50 more than they're paying. So you're buying their loyalty, absolutely no doubt about it. The second point is something that Akhil's probably itching to say when we're talking about refinance. If you rent your property under market value and you're looking to raise finance on it, your mortgage lender will look at what it's rented for over and above anything else. So if it's £1,000 flat and you're giving it away at £800 a month, then you ain't going to raise finance against it, because they're looking at the payment that's been made on the property. So although it's a good thing to do and it buys your tenants loyalty and you'll get longer term tenants, which in a way will actually increase your income because you don't have those empty periods. Every day your house is empty, you're losing £35 at that level. You're paying your agent to relet it, you're paying cleaning costs, you're paying maintenance costs, you're paying council tax, paying gas, you're paying electric. It kills you when your house is empty. But if you're thinking of refinancing, and Akhil, jump in whenever you like here because I'm starting to get in the financial advice category, which I'm not. If you're thinking of refinancing, then your property should be let at the market value.
Yeah, no, I echo everything you said there, Mike, and you've said it so correctly. Just be conscious, as Mike said, around refinancing and what you're getting for it rather than market value first and foremost. But from an investor's point of view, and putting my landlord hat on, it costs every time to get a new tenant in. The void periods can become very costly. So you might want to take a view. Sometimes 50 quid under market value can serve you better for the long term. But it depends how much lower it is than the actual market value. So just be conscious of, I would prefer to pay, have a longer tenant in, because it does cost money and arranging viewings and so on. I would go with, I would go with 50 quid under market value and hold my tenant for longer. That's what I would do if I put on my landlord hat. But just do be conscious of your refinance side of it. But again, Mike did correctly say about the refinancing, and if it is 10 or 15% below market value, lenders will take a view, and they will use that common sense approach. And they can see that the tenant's been there for a long period of time, so they will take a more of as I said, a commercial view on that. So, yeah, great question, Andy.
Yeah, great question. And one thing that I, just to add on the end there, that I like to talk about with landlords is when the property's gone on the market, you've had the viewings, you've got the offers. It's nice to talk about the selection and the variety of tenants that are available for that landlord, because it gives them the opportunity to feel the ball's in their court and they can pick the tenant that feels right for their desire and their needs. And I think if you look at just trying over 50 quid on the £1,000 that we spoke about, well, 50 times 20 months is 1 month void. So sometimes it makes sense to kind of just go with the safe bet and have the variety, I think. But yeah, great question, Andy. Chris from earlier just said, thanks for the advice. We got Paul on here as well, kind of just jumping on from what Mike was talking about with kind of architectural and planning and building costs. So you got Paul there if anyone's thinking, right, I might purchase that and build a big extension on the back. Could I get a double-storey extension? Has the garage got footings to go over the top? Have a chat with Paul. Good to see you on the chat. And if you've got any other questions, Paul, fire them in. We've got a Facebook user, don't know who they are because they're probably not following our personal page. This one might be more accountant level than us, but how does capital gains tax work? Does it affect you when flipping a property or when you rent a property out? Mike, is that something that you want to give a bit of a brief on, or Akhil, either of you?
Yeah, no, so I'm no tax advisor, but the CGT element is only due once you've flipped and sold that investment properties, in short.
I think that's probably as much detail as we can give on that. It's very much talk to a good accountant, and they will hopefully save you money in the tax area. That's what you pay them for. So tax is always one of those that it's not about opinions, it's about doing it right. So jump on and speak to a good accountant. And if someone wants a recommendation on a good tax advice accountant, probably all three of us have got someone that we could recommend that would do you right. Getting back to the agenda, and thanks for the questions. And if people have got more, fire them in. We were kind of talking off camera, Akhil, about different ways around ERC penalties, and you were quite keen to sort of bring this into the conversation. So do you want to kind of explain that to everyone and then talk about, that as a potential property investing option at the moment for people?
Yeah, it's linked to what we talked about earlier around the BRR strategy. Now, for those of you that are looking to buy property, add value, and then refinance using the BRR strategy, please look at or engage with your mortgage brokers to understand the options that are available without any ERC penalty. So for those of you that may have just joined us late in the call, ERC stands for early repayment charge. And what I'm alluding to here is if you're looking to add value to the property, go for a mortgage if possible, because that's the cheapest option to acquire that property with a no ERC product, which then allows you to do the refurb and then refinance to any lender that's applicable to you without incurring any new charges. So, I'm happy to provide a couple of options, anytime of the week. For example, there's a lender by the name of Landlord, who offer no early repayment charges, and their rate is tracked by the Bank of England base rate. So from my memory, it's 3.55 on a 2-year tracker with a 2% arrangement fee, but it allows you to refinance onto another lender, for example, anytime that you choose. Now, it's now you can't do it so many times. It's not something you can do on a monthly basis, for example, because lenders will catch up on it and not allow you to do it with them. But if you're doing a couple a year, the lenders like Landlord are keen for that type of business, and clearly they are, because they've got a tracker rate mortgage with no early repayment charges. So for those property investors that are looking to add value to properties in particular, look at those options, because bridging, yes, it does serve a great practice and it's a great tool to have in the toolbox. It's slightly more expensive than a buy-to-let loan, but again, it can be quite convenient. So if the property is mortgageable and habitable, then yes, you can go for a no ERC product. But if you're buying a property that's not mortgageable nor habitable, or either or, then you may need to go down the bridging route, and that's another useful tool where then you can refinance onto a term product, the day after, a month later, or 6 months later, whenever you choose to.
And you specialise in many things, but bridging I've often spoke to you about. People are scared of it, I think. I don't know, Mike, from your perspective, I see you kind of smile there. I think in the general kind of property game, people are scared of the bridging word, but Akhil, would you think that's something that people do need to fear, or what maybe is the reasons behind that?
I think if there's lots of historical reasons, and then the key one here is the interest rates back in the day were very, very high, and it's only back to like sort of 2010, 2012 where rates were at 15, 16, 17%, which is very dear, and I appreciate that. However, we're now at rates of 0.5% a month, so the equivalent of 6% per annum, which is quite close to, you know, adverse mortgage rates at 6% per annum. So I would say bridging loans do serve a great purpose, and it's a great tool to have in the book. With regards to people that are not keen on it, I think it's a conversation I do have with the client, and I ask them first and foremost why, what's the bad experience, and then we will try to iron out those issues. And then if they don't like the word bridging finance, some people call it short-term finance. So if you ever heard of say, hey, short-term finance, it basically means AKA bridging loans. All right, so it's just another way of spicing it up a little. But I think the key thing here for those people that are interested in taking on bridging loans or finding out more information, discuss the nature of the purchase, discuss the nature of the purchase price, the renovation costs, and the end value. We'll break it down in very, very simple English terms so you understand what the pricing looks like and how affordable it is. And the beauty about a bridging loan is short, most clients do not have to service that loan on a monthly basis, whereas a mortgage, you've got to service that direct debit on the first of each month. Whereas a bridging loan is great for capital allowance, and you don't have to pay the mortgage or any finance payments on a monthly basis because the lender retains the interest for the duration of the loan. So for example, if you take up a 6-month bridging loan, the lender will take the 6 months interest and they deduct that off the gross loan on day one. If you decide to repay that loan, say for example in month 3 of the 6-month loan, they'll just reimburse you and reimburse you that 3 months interest and put it on the redemption statement, with the conveyancer. So it's horses for courses. You know, explore every opportunity. You know, if you're looking to grow that portfolio and scale that portfolio, you've got to leverage, but you've got to leverage with the right manner and taking up the relevant advice as well.
It's really interesting stuff, Mike. Let's just sort of look at it from a potential scenario. Let's say that you've got a nice property on the market, semi-detached, garage on the side, single reception room, and it's on the market for kind of, I don't know, 325, and then you're looking at bringing a 4th bedroom over the top with an ensuite, turning the garage into a nice second reception room, maybe going around the back in the sort of rough Berkshire area. I know it's location, but what sort of markup would you expect on a rundown 325 to a really nice 4-bed semi with 2 reception rooms and 2 bathrooms upstairs? What rough sort of capital increase would you expect on something like that around here?
Capital increase or rental increase?
Well, actual equity increase.
Equity, yeah. I mean, yeah, it depends what town you're in and what level you're in, but there's every chance right here, right now, where every man and his dog seems to want to upsize. 3-bedroom houses have gone like this, and 4-bedroom houses have gone like that. So if you can bridge that gap, then it feels like there's profit in it. So I know the streets around me where a 3-bedroom house will be 450 to 500, but a 4-bedroom house where they've gone over the garage can be as much as £600,000. But we know that a good over the garage and garage conversion is probably 50k. So yeah. if you pick your house, then you're spending 50,000 plus obviously all your borrowing costs and your mortgage costs while you're doing it, but potentially you're increasing the capital value of your house by anything up to 100,000.
So it's options, isn't it? Options to look at. Let's talk about trends. You know, we're talking about the world being a very different place at the moment. I'm interested to get Akhil's input on what landlord trends you're experiencing at the moment, or property investment trends in general that are coming to talk to you with maybe different questions to what you experienced in volume 12 months ago. From a tenant perspective, Mike, what's the different types of trends that you're finding with tenant criteria at the moment, so that if landlords are looking for that safe bet property investment, what is the appeal at the moment from a tenant's perspective for those people watching?
Same as anybody else, more space. outside space, work from home space. Kids are at home more, you're working from home more. And if you were in a flat or somewhere without a garden during last summer, this summer you want something with a garden because you don't want to get caught out again. So trends as far as what people are looking to move to is exactly that. The sort of mid-range houses, somewhere where you're going to be comfortable should you not have a social life for the next 12 months. So yeah, I mean that's absolute basics on it. Trends as far as tenancies go, as I said earlier, tenancies are getting longer and longer. So people are less inclined to jump and flip and move, because if you're in a stable job, you're going to stay in your stable job. You're not going to move 100 miles for a new job because of where we are and where the world stands at the moment.
And in the sales market at the moment, we're experiencing a lot of people talking about fourth bedrooms very much being power out for Akhil. Very much fourth bedrooms we're seeing fourth bedrooms where they were classed as that box room and now becoming the home office. That's in the sales market. We're seeing people that want to have garages because they want to turn them into gyms or home offices. We're seeing more and more people putting summer houses in the garden and classifying them as a home office or a garden office because it's got power and lighting and a broadband connection. Are they adding value at all in any way in the rental element of things as well? And if you're a landlord that could do that to your property, would you do that for a longer term let? Do you think that's sensible?
Yeah, I would. A garage was always something as a landlord and as a letting agent, which was a nice to have, but not essential. It was the sort of thing, if you had one house with a garage and one house without a garage, yeah, it might rent slightly quicker. It could, because it might attract a certain type of tenant who had a motorbike or was self-employed and was on the tools and needed somewhere to store things. But yeah, right here, right now, internal accommodation's king.
Interesting stuff. Akhil, what would be the single most frequent question you're finding from property investors and landlords at the moment when they're coming to you for finance?
What's the maximum I can borrow? That's the key question here. A lot of clients are asking us, what's the maximum we can borrow, and how cheap can we borrow money at? And our clients actually started back in 2019, especially the portfolio guys and girls. They were actually preempting a housing crash in 2020. What happened was we had something called COVID turn up, and the market spiked in terms of values and rentals. So what's happened is we preempted something that didn't go right. But what's actually happened is they know that we've got a housing shortage. We need to buy property today as soon as possible. And the best, and how they're adding value to it, and it's great that what you touched on, both of you there, you alluded to, is how can I make the best out of this property? And if we're going to look at trends around working from home, the fundamentals is how you add value to any property is by adding a bedroom. That's the first and foremost. Anything else beyond that, so if it's a balcony, it's larger kitchen with desk space to put a laptop on, that's an added benefit. But where can you add a bedroom to employ an office now going forward? Because you can't work from a couch. It's very difficult. So adding a bedroom or adding an office space is certainly going to add value to any property going forward. And so that's one way of clients have done it. And then the other way is they're creating mini HMOs. Mini HMOs, getting professional tenants in, but having the right services in the area. So great broadband, great communication, door entry, and so on and so on. Multiple kitchens, so kitchenettes in each room. So they're making them sort of mini hotels. I've got clients that are creating mini hotels within their HMOs, and they are fully dressed up. You'd think they're Hilton hotels inside, and they're fully equipped with Nescafe, Nespresso machines, broadbands on point, keyless entry system. So they're really throwing everything at it, and I think that is the way to go. I think a lot of people ask me, do you think London's going to close forever? Are people ever going to go back to the office? To be honest with you, I think they will go back to the office because people will get bored and they want to see their mates and so on. But I think working from home is here to stay for quite some time. So don't shoot yourself in the foot and not do the right thing, especially if you are looking to add value to property. Do it in the right manner and follow the trend. There's a massive saying that don't catch a falling knife. Follow the trend. Follow the trend.
No, love that. I put myself on mute there just because it sounds like someone's destroying the office around the corner, so I didn't want too much echo noise. You've linked us nicely there onto HMOs, which I think is the next live video that we're going to do, and really get into the crux of that, because much like when we spoke about bridging finance, it's very easy to throw it as a single item in a bucket, where actually there's so many different varieties to HMOs and investing. And you touched on there some of the fantastic ones I'm seeing on Instagram at the moment with various people at the moment, where you would quite happily live there indefinitely, because there's an awesome setup. But tonight's been really good to kind of cover trends, expectations for 2021 we haven't touched on yet, and we will do, but it was really good to kind of talk about the different options out there, Akhil, and from your point of view as well, talking about how people can purchase, refurb, and then get into refinancing. And I think it's a good option for people if they want to grow a portfolio quickly, and they want to take advantage of a property market at the moment where there are deals to be had and there is equity growth to have as well. And renting is a safe bet at the moment to put your money. I sold someone a flat today that was a buy to let. She'd inherited the money. She said to me it's sat in the bank account on 0.000000001, making her 1p every year, and she's decided I'm better off putting it into a buy to let. She's never going to live there. It's about a calculation. It's a much safer bet for her than it is to leave it in the bank, and that makes sense. So 2021 expectations, Mike, from your perspective, for the property investors out there, what's your expectations on the market, just in a quick 30-second snapshot?
Yeah, I think it's continued short supply of property, continued longer tenancies, and with a short supply, longer tenancies, strong rentals. That's my prediction. I can't see anything but. So
if you are a tenant at the moment, probably it's also a good opportunity, and this is a different show altogether, but to look at getting out of that tenancy, or if you are trying to move to a new property, to look at getting on the property market, because it looks like rents potentially could climb. Akhil, from your point of view, what's your expectations on 2021?
I think this is a golden opportunity to deploy your cash in the right direction. I think we've basically got an open goal here. We've got no hikes in interest, no hikes in capital gains. Income taxes are beneficial for everyone at the moment. I think it's an open goal. Invest responsibly, find great opportunities where you're going to get great yielding assets. I know in London and the Southeast, capital growths are going to be shying away for the next couple of years or so at the moment, but find the right property that's going to wash its own face and service you well, and where you can add value. So look for freehold properties rather than leasehold, because you've got opportunity to add value by doing permitted development, built planning, and so on. So in short, buy freehold. It's a great opportunity to buy, refurb, and refinance for long-term hold. And I still think there's so many golden nuggets out there in terms of areas as well. We've got a shortage of housing. We're only a small island. Only 15% is built on, but I think there's great opportunity. So exploit the permitted development opportunity as well, guys.
Massively agree. Paul, from an architectural point of view, just come in with a last question just as we were about to wrap up and get home for some tea. And he's asking, guys, I find a lot, because obviously Paul's in architectural design, design and build. I find a lot of my clients are obsessed about extending from a 4-bed to a 5-bed, which often results in a compromised space. We rather sell luxurious 4-beds or small 5-beds, and I think he means, would we rather sell a more luxurious 4-bed or a small 5-bed? Difficult question to answer, because I guess it's very, very different. Mike is a big fan of 4. He's put and Akhil's going 5. So I think when you're looking at it from a residential,
hard to sell a house with a silly layout. If you're chopping and you're changing and you're building corridors in order to cram in another room, people are going to find it weird. People won't understand it. People won't know why you've done it. If you end up with 3 single rooms,
it's a valid point. It's a great point, Mike, because you've got L-shaped rooms you might turn that 5-bed into. The reason why I said 5, I'm not disagreeing with Mike whatsoever, and I do agree with what he said. The only reason why I said a 5, because that small little dingy bedroom could be that home office. So I'm looking at that opportunity from that perspective, but I'm not disagreeing with Mike. It's horses for courses.
And I guess it depends on the desired outcome, doesn't it? If you are doing that, Paul, because your client is going to live there for the next 15 years and the benefit to them is X, then that it doesn't matter what the equity growth is, what the rental value is. If they're doing it because they want to turn it into a rental, then a snapshot, I guess, Mike, you would value a 5-bed from a rental perspective higher than you would often value a 4-bed by standard. By sales valuation, maybe not so much.
He's just nailed it in the comments. Most people only need 4 bedrooms.
Most people only need 4 bedrooms.
He's thinking down my lines.
He knows the answer to the question. Unless you're getting into HMOs, which again is for the next show, because that's something different there again. I think the word luxury was mentioned in there, Paul, as well. And I think when you get into luxury, you expect to see big rooms. I think you expect to see that space. When you're getting into rental value or HMOs or different types of setups, then potentially the 5th bedroom is, like Akhil says, very vital for people at the moment. And yeah, often people do need 4 rooms, but I know a lot of people at the moment, they're looking at 3-story luxury houses because they want the top floor bonus room as a really nice games room, cinema room, gym, workout room. And trends have changed. You know, the world is a different place now. So we could talk about that forever. We don't have the crystal ball, but it's exciting to find out where we'll be in 12 months' time, because if we think 12 months ago from now, we wouldn't have expected the property market to be doing this. So, you know, it's good times. Mike, thank you for your time. Akhil, thank you very much for your wisdom, experience and time as well. And we will join everyone soon, no doubt.
Thanks for having me. All the best.